Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Tuesday, the 6th of June, 2017, about 1:35 p.m. Central Daylight Time. Sorry for not being around yesterday. My subscribers to my research knew that I had to be with a family member out of state as they were getting an operation. I'm fine, and important to be there. I got back in yesterday late, and now we're back to normal. So what is back to normal becomes the question, and that's the issue here. In the grain markets, you're seeing wheat acting pretty good here. Wheat is trying to bottom out. That's what we think on the charts. However, and I'm not talking from a fundamental point of view, just a charting point of view, the corn market getting a bounce because we saw yesterday that even though the crops are getting caught up, those that haven't been planted in key states, the question is, will they get planted? And that's becoming a question mark here. You know, there's crop insurance. There's the question of does it make any sense to replant this late into the year in some areas? Who knows? We'll find out what that means. The bean market, which had a good bounce, you do realize the market hit 934 and a quarter, sold off into the close. Yeah, closed higher, but it gave back just about all the gains. Big day for that market, important. Meal market up a little bit, but we'll get to all this in a second here. Let's start with the beans. In the bean market, as you can see, you've gone from 980 to 909 and a half. You had a bounce just now, got up to 934, and here you are in the 920s, just sort of sitting here at this point in time. As for the thrust of the market on a closing basis only, that's all it is, just on a daily basis of closes, I call it an up thrust, going from 912 and a quarter to the highest close you've just had at 923 and a half. Should you take out 912 and a quarter, wouldn't surprise me if the market starts targeting at least the $9 mark, and that's on a closing basis. When we look at what the chart has done, it was a labored rally that today, instead of closing near the highs of the day, which would have looked pretty good on the charts, to be honest, the market labored for a higher close. In terms of the swing lines, you're in an uptrend. You have a pattern of higher lows and higher highs. That is bullish. When we see where it's at in relation to the 18-day moving average of closes, MAC, moving average of closes, the market's under it. So at best, this is a contra-bias rally. And the trend of the market, if you define it as the swing lines up, but the overall bias, because you're under the 18-day average of closes, which I consider the filter of the swing line, that is still pointing down. Not a very good piece there. In terms of Bollinger Bands, I understand the rally. You had broken down hard against the Bollinger Band. You moved to the right-hand side. You caught some stop orders. You had the rally, and now the question is what next? And in momentum, because of the close, well, you kept the fully embedded reading. Therefore, when you keep that fully embedded reading, this rally so far was just a selling opportunities for those that pay attention to the slow stochastics. And in the hierarchy of technical indicators, this is the grandfather. That's number one. The rest are all, at the end of the day, they take a back seat to whatever that slow stochastic does if it's embedded. And it's still embedded. In the meal market, you had a shot here to lose the embedded reading in meal. You had lost it most of the day. Then in the closes, the market started selling off. It regained it. Should you take out these lows here of today, let's call it 330, the market could easily make a run back here. This was a failed attempt today at the 18-day average. Doesn't mean it can't get up there tomorrow, but it's a failed attempt. And even though the market closed higher, it's a weak close. In the soybean oil market, you rallied enough to get this high over 31.58, but it's meaningless. Yes, it negates the swing line, so it's no longer trending. It doesn't have a pattern of lower highs and lower lows. But in the hierarchy, you have the embedded reading. Therefore, I think the pros sold into this as well today. The corn market's different. The corn market rallied, got up sharply to 79 3/4 today, and then it came back to roost, if you will, right at the upper Bollinger Band, couldn't stay over it. So now the market is again, and this has been the pattern that's going on. Notice that since April, you have not hit a lower Bollinger Band, but in April you hit the upper bands. Again, 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 again. So the market has been trying to come up, not down, and we've heard all that talk from a fundamental point of view way back when the word was that the farmers were going to divert a certain amount of corn acreage to soybeans. Now, I've been around this for enough years to know a farmer doesn't say, gee, I'm going to give 10% of my crop over to soybeans. It doesn't make any economic sense for 10%. They're going to go in and say, I'm going to do 20, 30% of my crop, whatever it is, and that was the first talk that gave this market some support. If there's going to be diversion, it's not going to be a small amount. That was the trade thought. You're still seeing that, and you're seeing the market fighting for the uptrend. This is clearly not a market to be short. It's in an uptrend. You have a pattern of higher lows and higher highs. That's bullish. Yes, it's against the upper Bollinger Band and the 100-day average, and you haven't been able to stay over this as a group. So that's a warning sign. But at some point, if it's going to be bullish, it has to start bending out the upper Bollinger Band. What I'm concerned about is the market is overbought. It's got a 72 reading in stochastics. I consider any reading over 70 is entering overbought status. Therefore, I have an overbought status into the profit objective, which is the upper Bollinger Band. Now it's up to the market to prove, can it do anything? I've got to say the same thing is true of wheat. And I know a lot of traders in my company especially, and we are known as a pretty good-sized trade company in terms of market research, our know-how, and so on. Well, the market is looking at this as a basing action now. What does it do from here? Certainly momentum's up. The trend is up. You got higher lows, higher highs. Again, you hit the upper Bollinger Band and ran into that brick wall. I will not be surprised to see the market try to pull back at any point in time. But is there a reason to be short? Zero. None. We get to the sugar market. This market is still very bearish. Lower highs all the way through. The red arrows show the most recent ones. Lower lows. Riding the lower Bollinger Band. Getting the embedded reading. With today's action, both numbers under 20. They were under 20 on Monday, and they were under 20 on Friday. So you have your fully embedded stochastics. You weren't there on Thursday. But now that you have them, given good rallies, what do you think the trade's going to do? I think they're going to sell the market. In the coffee market, big outside day down as the market has now got to make a decision as it's oversold. Does it go into another leg? Now take a look at the lower Bollinger Band. It's currently 125.06. Today's low, 125.45. Wouldn't be surprised if you hit it. What else do you see on the chart? Because it should come jumping out at you. Look at how the market keeps failing against the 18-day average of closes. That is a sign of a market that gets itself oversold, whatever, and then gets its bounce, but the bounce goes nowhere. So trend down. Cocoa market. I see resistance in this market right here between the 18-day average and the 100. Take out 2033, and what happens is you negate the downtrend. But you're in a downtrend because you got lower highs, lower lows. You're under the 18-day average of closes. Momentum is pointing down. The best you can do is negate the downtrend if you're looking for it to be bullish. The best you can do as a bear is just start shoving the market down and look for the lower Bollinger Band. In the cotton market, you do realize this market's had nothing but bearish plays since it peaked out here in the 8,700 area, and it has just fallen all the way back. Now, this move was because they were scared of what was called pricing the cotton for delivery, but apparently they've resolved all that, and you've had a pattern of lower highs, lower lows, and embedded reading. I'm surprised you haven't made a run down here yet into the lower Bollinger Band. That could easily happen. In the cattle market today, Now, I was gone yesterday, but I know I would have said, hey, folks, you got 2 days in a row over the upper Bollinger Band. It's time to be careful. You're overbought as can be. This is what you looked like. Do you buy over an upper Bollinger Band? The way I teach it, you never would. And if the market's going to fail here, watch out, and that's what's going on. So now, back in the play becomes the 18-day average at the 121.30s. In the feeder cattle, you have the same type of condition. You got a lower low, a higher high. You had 2 days over the upper Bollinger Band, bang. Limit down close today in the feeder cattle. Now this cattle market, both young and fat cattle have had a good run because of cash markets that are strong. The opening in July of our export market, China. Do cattle just start going out to China? I don't know. There's licensing that I haven't heard enough about. There's a lot of elements. But the market is going to open, and I think it will be a very big market for American beef very soon. I'm not talking history down the road. I'm talking very soon, and that's why the market's rallied so much. In the hogs, today you got down, challenged the lower the lower 18-day average of closes. Now, let's talk about a play. Here is the market on Thursday. You have your embedded reading. On Friday, you lose it. What should happen if the market doesn't regain this on Monday? In theory, price and the 18-day average should come together. This is Monday. They certainly didn't come together. Therefore, I'm looking for price and the 18-day average to do that. And as far as I'm concerned, you're there, and now the market can restructure itself. So that's what I saw on that part of it. Now, don't go away, because Thursday is going to be all important to all of you. On Thursday, we're going to have the UK election. We start off the day with the European Central Bank. It's going to give us its monetary policy and Mr. Draghi's all-important press conference. And then, of course, we finish off the day with what? We're going to finish off the day with ex-FBI Director Comey's speech, or interview, if you will, before the Senate Intelligence Committee, I believe it's called. Therefore, it's going to get crazy. You think it's not going to affect these markets? It is. I'm going to be spending my day writing about it and then doing my reviews here so that my subscribers get to see, trade here, do this, put a stop, take a profit, where do you go in the market? And I'm going to spend a lot of time on this. If you haven't had access to my research, now's the time to do it. If you have had access, you got a $20 discount off your first 30 days. My research is $60 for 30 days if you don't have a trading account with us. Therefore, it'll be $40. If you have a trading account, it's $40, less the $20, it's $20. And you can stop it at any time. Go to our website, www.iraepstein.com. In the website, go under the word Ira's Research. You will see Become a Subscriber. Put in the IRA 20, and you'll see IRA 20 on our screen, I hope. Just put that in. You can type it in any way, lower caps, upper caps. It's not going to matter. This is going to stop this week. So this discount coming to an end now. So get ready for that to end. You can click on here, by the way, and you'll be able to either sign up for what we have, or I recommend you just go right in for the vast majority of you and take a look at becoming a subscriber. But if you haven't tried it, go to the website. It's real simple. You'll see a carousel of free offers. Click on any of them in the form. Try the 20 days. We keep a list. You can only get one. It's the end of it. I'm not going to give you down the road another one. It isn't going to happen. You either want the research or you don't. And I tell you, the most important thing I do to start out your day, to start it out, is that morning video, because it really sets you up. I'm Ira. You have a great day, and I'll talk to you all later.